Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping in today. Can I please get a audio and screen check in YouTube and the Bookmap Discord Trader Lab community? Good morning, everyone. Thanks for stopping by the Trader Lab. I'm your host, Tom B. I stream live Monday through Friday, 11:30 to 1 p.m. Eastern Standard Time, and this stream's about integrating Bookmap order flow tools with auction market theory using the volume profile in the intraday developing time frame using a top-down, bottom-up approach, top-down, higher or intermediate time frame, and then on down in a structured fashion into microstructures for potential triggering. The goal of this stream is to help traders understand how the market works, why it does what it does, and how you might get in alignment at times with it. The other aspect of this is that trading is not a prediction business. Now, whether or not you accept that is fine. I'm not here to convince you to change your beliefs, but I think it is important that you understand how the market works, and then you can choose whatever works for you. In the end, it's not about right, wrong. It's about what creates a statistical edge over a large sample size of interactions in a random environment. And again, whether or not that's your truth, it doesn't, it's okay. What really is important about all this is to separate what we think trading is from what it might be. And again, this is only based on my experience. I've been doing this going on 44 years, and that doesn't mean it's the truth for you. So I'm going to share what I have found after many years of working in different processes to try to establish an understanding of market mechanics, what I have found to be true for me. And again, past performance is not indicative of future results. Ultimately, all of us as individuals have to determine what is right for us individually. Also, I want to remind everyone that I am streaming from Costa Rica. The power and the internet can be intermittent. So if you're in YouTube, again, thanks for stopping by and visiting. If I drop out, I'll do everything I can to reestablish a connection. However, it might be problematic. And if I cannot get back into YouTube, this stream will continue in the Bookmap Discord Trader Lab. And if there is a link in the bottom of YouTube, if you want to come over to Trader Lab in Bookmap server, you can. You don't have to be a Bookmap subscriber. You'll never be solicited by Bookmap. Plus, it's a community of like-minded traders. Our senior trader has 54 years experience, and as you know, I'm going on 44 years. And then we have the full range of traders from newer traders and a full range of experience and approaches. So it's not one size or one way. It's the leverage of the collective experience that helps make us all better. However, what I share here in the stream is based on 60 PDFs of structured trades that you as individuals can reverse engineer, see if they might have a place in your process. Also, a library of webinars on market mechanics, showing these in play, some up to 4 hours long of real-time narration, so you can see this in real time. And again, past performance not indicative of future results, and it's really just about understanding ways to interpret market behavior. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results, and please remember, this is not a trade calling room. This is for educational purposes. It is based on structured trades that I have developed over a number of years. And you can visit the Bookmap Discord Trader Lab, download the PDFs of the structured trades, as well as observe the library of webinars. I think there's about 27 or so in there with various configurations and conditions. One of the things most traders don't understand is that the market is really not an indicator-based business. Indicators are outputs of price and derivatives of price, which is all fine. The problem we have with indicators is that most of us psychologically are looking for red light, green light, and most of us are also psychologically looking to avoid the pain of loss. Now, I understand pain, I understand loss. However, the business model, and this is important, I'll take a minute on this, is casinos, gaming. And if you understand and you can put away your need to be right and all your indicators to compress risk out and create certainty, you might embrace randomness. And why would you want to do that when you want certainty? Well, psychologically, we're wired for certainty. Psychologically, we're wired to avoid pain or worse. And psychologically, when we were basically on the savannah, back in the day with the saber-toothed tiger, we're wired to go in the other direction, to run away from risk. That's why we've survived as a species. Well, we still bring that with us to everything we do in life. And we're looking for certainty, predictability. And it works pretty well out in the world we live in. But we still have the primal wiring of trying to avoid risk. So most of us at some point or early on in our development, and some never change, are always working towards getting away from risk. But in trading, it's the opposite. We have to run into the burning building, not run away from it. So it's counterintuitive. So and I'm using intuitive as intuition. Our intuition then drives us to have certain beliefs. Those beliefs may not be in alignment with the business of trading, and that is what gaming theory is about. The casinos, who are a great model, don't make it up, they don't tweak, they don't tune, they don't add more into a game. They play the game consistently with something called anchored inputs. Retail traders, for the most part, are using variable random inputs, and that's where your multiple time frames, multiple indicators, whatever you want to throw against the wall that sticks, and you're constantly tweaking and tuning, which is, as I call, Trader Groundhog Day. It's absolutely not gaming. It is gambling, in my opinion. Now, you don't need to accept this, of course. I'm not saying you should. But if you keep waking up with Trader Groundhog Day, you might want to step back and reflect. Are you curve fitting? Are you trying to squeeze risk out? Of course. We all want to win more, of course. But what do the casinos do? They don't change the game when somebody walks out with cash from the casino. They see it as cost of production and overhead because they accept they're in a random environment, not a prediction business. Does that make sense? You should be taking notes, and it's not about converting you to different beliefs. It's about you taking your experience and maybe extracting something from the experience, because if you're trying to fix a potentially defective process, you will be waking up in the same place. Now, the problem with a defective process in a random environment is that it works at times, but over a large sample size, you may have what's called a negative expectancy, or it's a guaranteed loser over time. Just like the gamblers in the casinos, they walk out with the cash. That's why they come back to the table. But over time, they don't have the edge. The house does. Think about it. Really important. And again, this may not apply to you. Past performance is not indicative of future results. Now, briefly, higher time frame. Let's go take a look at this. Why is it important? Because the market goes up. Write this down. The market goes up to go down, and it goes down to go up. And whenever time I say this, I always think you guys on the other side of this stream are rolling your eyes back. You say, boy, I didn't need to listen to this. No, but it's important. Let's think about it. Let's go take a look at the higher time frame. You'll know what I'm talking about. This is the RTH, not including today. So let's look. We had a consolidation here. You all know about it. I'm not going to scroll this down. And we broke out of it. Trend day up. Oh, my God, it's going to the moon, Alice. 2 days of consolidation. Now, this was a day, and I know I go over this for you guys. Let me turn one other thing on here. These yellow lines are the highest volume on each individual RTH day or candle. Still think bars, but candles. In this 2 day consolidation, 48.83 was the highest volume. Volume profile allows us to see inside of price. When you see this, well, sure, it went up, great. Well, as like, for example, here, these days are overlapping. Well, what happened inside of these bars, volume-wise? Because volume, if you think of trading, and I'm not suggesting you do, but I'm going to say one way to think of trading is shopping. What's too high, what's too low? That's why the market goes up to go down and goes down to go up. Because what's too low, what's too high? So as the market is trading, we are anticipating that at some point, if all these longs, these guys have had no heat. Look at this, buying, oh my goodness. And here I thought, if you remember, I always talk about this day, we came within a couple of ticks of taking out the previous day's low. We didn't do it. That means all these longs, let's just look at the higher lows. They have not taken any pain. Okay? Now, yesterday, what did we do? Oh, get out of there. Hold on. Trouble in River City. Don't ask me why. Too low, too low. Yee. And then we had a strong day up. Hoping my internet's still working here. You never know with this. Took out this high and then closed on the low. I think we might agree that's a potential reversal. Now, we don't know, but yeah, going into FOMC, we had major earnings coming out, and we took the shorts out. One moment. So this is yesterday. Now, so what we do is we draw something over to see the volume. High volume was up here, and then we fell out of it. So this day, which was basically a what's called neutral extreme day. No, there's extreme up, and it was like the express train. This area here was poorly auctioned. In other words, we just ripped away from it. Well, then yesterday, we came down into it. So now we started filling this in. So that sets up potential continuation lower, and of course, nobody knows. Now, here's some other things that are important. This price is too high. Consider that retail. What's too high? What's retail? High volume. Remember, shopping. If the retail price in a store is too high, when you come back to shop there, if it's too high and the green line is the same, you're not paying that. I'm out of here. You leave. The next retail price, high volume, is down around $49.30. For this whole consolidation from where we lifted off, the high price for this whole area, highest volume, this is fractal. I'm just going down in time, if you will. 49.16, 49.17. Okay? And what else are we doing? Stops. We'll see, right? Is everybody tracking? Now that we got that out of the way, and by the way, I can't see your questions or anything, but now I should be able to get the everything back. Okay. If you have questions, please post them. There's about a 15-second delay in YouTube, and the same thing in the Bookmap Discord Trader Lab. Please keep it to specifically questions related to the topic. If you have support questions or something, please, you can go to the knowledge base at bookmap.com, or there's a supports available through email and live chat. Okay, so this is the RTH Open, we think. Maybe. Let me just, hold on, just spilled my coconut. I got one of those coconuts sitting here on the desk. I am streaming live from Costa Rica, so things do get a little, hold on, I got to get this coconut out of here. One moment. I'm sorry, I'm back. Okay, let's see if I can get this working again. Hold on. Okay, this is the RTH Open. So These are the levels I spoke about. Here's yesterday's low. By the way, ETH high, I'm giving you some new levels. 49.17, that's that intermediate time frame high volume node. These are important. So ETH low, ETH high. Yesterday's low, RTH open. What is this? The overnight volume point of control. And that's a high volume area. Think of it like shopping. It's a retail price. What was the micro composite high volume node? Same. So higher time frame or fractal. This is a high volume area. And if you think of trading like shopping, if you think of trading like shopping, if this price is too high, we might reject it. If we fill the gap, so we're opening in a gap, yesterday's low, and the potential to go to the ETH high. That's what I know. But the most important piece in this, in my opinion, and again, it's random, is this. Now, I know we can fill the gaps, right? We all know that. You know what else we know? We don't know. There's also another level, the overnight mid. Statistically, and I can't go over statistics, I don't have the time. Statistically, these are high probability targets, and those statistics are available to all of you in the Bookmap Discard Trader Lab chat to download. If you might find them useful. Why are statistics important, you're asking? Why do you care? Because we are in the gaming business, and gaming is about edge. So everything that we can extract, even though we're in a random environment like the casinos, gives us an edge. And of course, the outcome of any time you interact, with the participants in the market, individually and specifically, it's random. So let's look at the first trades. Now, what I share here in the stream are structured trades. And what I do here, so you understand, is show you the trades that are available for you to download. Now, win, lose, draw, that's just the way it is. There's no silver bullet. There's no magic 8-ball. Wish there was. There's nothing you can do to predict. All you can do is accept you're in a random environment, that you're in a gaming environment like the casinos, again, my opinion, and act accordingly. And the edge is something that's derived over a large sample size of interactions, not the next trade, the last trade. It's not about the quote curve fit and making it better. It has nothing to do with it. If you actually have a statistical edge, you're now sitting with the dealer in the casino. If you're the gambler, you know which side of the table you're on, and you know who has the edge. In the trading business, it's about the edge, not the next trade. It's all of them. Let's go take a look. So, 8:30 Central my time here in Costa Rica. Remember, if the stream goes down, we will try to reestablish connection in YouTube, and takes time for everything to recycle. And I will try to re-access YouTube. If I can't, you'll be able to come to the Bookmap Discord Trader Lab chat, and I will continue. It's just the technical aspect of it. In Discord, you don't have to be a Bookmap subscriber. You'll never be solicited. Just want to let you know there is a backup plan. Because in Costa Rica, monkey jumps off the vine, swings on, the cable for the internet, and everything gets nasty. So, RTH open. This is called the developing volume point of control. This starts at 0, and it starts measuring the volume. There's more. Let me just go. Remember, overnight volume point of control. This was the highest volume in the ETH. Think of these like shopping. So high volume is like buying something at retail. If the price is too high and you can buy it elsewhere at a lower price, you may not shop there. But and this is what I found so interesting when I first was working actually with Market Profile in the mid 80s. I actually learned it from Peter Stottlemyre. He taught it to me. And it was early on when it first came out into the public space. Stottlemyre was a grain trader, CBOT. So anyway, I met him early on. But and so I said, oh, this is the greatest thing. And I couldn't do anything with it. So, fun facts, no one tell. I couldn't figure it out. And the problem I had was I had grown up on it. Well, first of all, classical bar charting and then indicators. And I shared an office with George Lane, who created stochastics. So classical bar charting is measured moves and predictions. Okay. Then you go into indicators. Everything is trying to, you're trying to do, we all do the same thing. So I kind of went down those paths. So this is really, and then I got smart. I learned market profile, and I said, I'll put my indicators with the market profile, make it better. Not so much. And the reason was I create a conflict, an inconsistency. The casinos only play the games exactly the same way. They are consistent. We are inconsistent. That's, I think, the problem, or one of them. There's a number of them. So RTH Open. This is retail. I'm trading in fractals, so let's look. So here's what I know. I open in a gap. Now right here, I know there's a couple possibilities. I know this was the last retail price in the ETH, high volume. I know I have the ETH low, which has over a 90% probability of getting taken out. Past performance, not indicative of future results. I know in the next higher time frame, this is another high volume area. Think of these as fractals, and the way to think of fractal is Russian dolls, top down, bottom up. So intermediate time frame would be this. The recent auction, or call it a daily time frame, except it was in the ETH, is this. So most recent information. Okay. And we know about yesterday's low. We know we closed on the low and it's ugly. And also we know FOMC. So that's all we know. We don't know anything else. So, and this is a high time frame also in a fractal. So this is important. Towards that, who knows? ETH high, who knows, right? This is all the mystery and the joy. This, so statistically over 90%, this to get down here and then wherever, okay? So now you know the lay of the land. So when this opens up, I'm looking at it and I'm going, well, what is going to go? Are we going to gap and go? In other words, gap and or are we going to counter rotate and come back and check? So there's no way to know. So for me, I'm thinking, well, we're not that far away from the gap. It's not that far. It's only a couple points. It's not like gapping 20 points out. So I want to see if we're going to check this and this, and fill the gap. So I don't know. So, so I'm thinking, let's see. How do you like that? Let's see. Now let me show you how this works. And again, these are structured trades, and like everything, it's maybe. Write that down. The best you have is maybe. Why is it important maybe to think this way? This is a variable high volume node. This is what I made up a name I didn't know. I kind of started doing this a long time ago, and there was no way to describe what I was doing because I didn't do what everybody else did. So I didn't know. So anyway, this is retail. That's where the volume is. The market sells off. In other words, we see our seller. Now we have more volume here than we had here. This is saying that's too high. Think shopping. I'm not paying that. Volume. Retail. Why? Because the price shifts down. So I'm going to label that. I'm going, all right. And I'm tracking this. I'm going, and I do this. I have to do it manually because I haven't written code yet that'll do it. I can, let's just say, I want to label, it does a couple things for me. It keeps me engaged in the market. And I know what this means. I don't know what the market will do. So too high, let's just look. Developing daily time frame. Too high. And right here, here's the key. This shifts down. New retail price. Now, what are we trying to figure out in the market? What's too high? What's too low? What's retail? This is now retail. Is it too low? Now, here's the way this might work. If this is still too high, and the shoppers, think of traders and trading, if you will, as shopping. This is how you can maybe relate to it a little bit better. If we push off of this, then it's saying too high, too high. What do? We push in the opposite direction. So now there's another possibility. Is this too high? And we're coming back to check it. And I don't know. But what do I know? Too high, too low, check. If we come back here and we can't clear and we fall out the bottom, it's a short in the Trader Lab. Instead, we come back, we push through. I'm now over this level and I pull back here. So here's what I know. This might not be too high. I don't know yet, but this might be too low. Why? I cleared it. So it's labeled variable high volume node. Now let's watch. Is this too low? Market shifts higher. Let's label it. Let's just follow the yellow brick road. This is kind of like, click your heels a few times and hopefully, you're back in Kansas. Let's watch. So this is my process. I'm just saying it's a way to keep track of shopping, the shopping experience. So this is too low. This is now retail. What might it say? Too high, we went down. Too low, rotated up. Still don't know. If we held this on the way back, it might be a long. We did not. We pull back here. What is this? Is it too low? There's a bounce. Suspect. It might be a long. Pull back. This is now potentially too low. This shifts up. Right here I consider this a potential, right here is a critical place, because here's what can happen. If this up here is still too high, look at the alignment, look where it comes, right there. You can see it there. Is this too high? Is this too low? This shifts up, maybe too low, maybe too high. Retail, watch. Just watch. Test. And I'm right here, I'm going, truly, that's what I'm doing. I'm going, well, I know I have a high probability up here. I also know I got a high probability here. I also know I got to take you back. This is high volume, which is like shopping in the retail space. And this is the gap. Okay. So that's what I know. I don't know. Let's watch. Right here. Watch the symmetry. Too high. This, we come down here. It's like, maybe this is a short. I come back here. Maybe this is a short. But I am conflicted. This is more important to me than these other statistics. High volume is the most important element in my opinion. Now that changes subject to other elements, but at the open, this was the last location where the high volume was. So if we open below it, it might be on sale and we might come back and check it. This becomes a long in the Trader Lab or nothing, and you're stalking the gap fill and the short. So you have two opportunities here. One is a long to here, or fill the gap, this, and a short back to here, and then, because we remember at the top of the stream. First, I don't understand. Are you asking me a question? So we come up and check the overnight volume point of control. Let's look at a potential short. Now, I'm going to take you into microstructure. Now, nobody knows. If you took the long, that's your target, and then you're holding. And I know in the Trader Lab, here, microstructure, let's look at it. Here's volume. There, you can see it there. Here's the most important piece, this. If we reject it, then we're going to return here and maybe get here. So let's watch. So if you're in the Trader Lab, you would already know before the fact your price map, and you would anticipate to participate. Now, that's kind of a little saying I have. You got to anticipate to participate. In other words, you're not making it up. you actually know based on the condition of the market what your trade is. That's what those 60 PDFs are about. You don't know what's going to happen, but you would have a trade plan based on the condition of the market. That's what we do in the Trader Lab. Now, the outcome of any individual interaction is random. So right here, let's look at the difference. Let me open this up. I want to show you microstructure. This is kind of how you might underline stay in alignment. So volume, microstructure, buyer, come back to the structure. This is too low. Buyer, volume, microstructure, too low. Volume, we're pushing off. Too low. Volume, we're pushing off. Location, seller. Maybe too high. Watch. Seller, too high. Now what? Notice a change. Let's look. Now, this is a trigger in the Trader Lab. Let's look at it. Target, overnight volume, point of control. Change in behavior. Notice the seller. Anybody see anything different here? Up, 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 up. Sell. Sell. Back to the mid. You think it's going north? If that's in your plan, you get long. Me, not so much. Right here, seller. Well, look at the volume. Remember, I'm doing the opposite. Volume, buyer, test. Volume, buyer, volume, buyer, volume, buyer, volume, seller. Now what? Volume is here. Test. Trader Lab structured short. To where? Where are the stops for the longs? Under the mid, under the VWAP, and what's retail? Here. So retail in the ETH, I'm not paying that. Are you crazy? I'm leaving the store. Let's go back to here. And then all the longs that are in this leg, their stops are under here. So now we're going for that and down to here. Let's see how this plays. Let's look a little further. Now, so that's your short. Now, we have what level? This and this. So if this is too high, here, we return, take the longs out here. Thanks for playing. This is when your broker sends you a gift basket. Break down. Take out these guys. Sell stops, right? Pull back here. Is this price too high? Yes or no? Well, remember, too high, I'm not paying that. Break below. Is it still too high? And I have a statistic with over a 90% probability. Past performance, not indicative of future results. You know, you got to vet these, right? Next target. Let's keep going. VPOC migration. Too high. This is now retail, and what creates this is the volume. No indicators. What it does, it mean, and there's another piece. 49.17 is and I showed this at the top of the stream, and if you missed the higher time frame overview and where these higher time frame levels come from, if you're in the Bookmap Discord Trader Lab, you will have access to this exclusively for review, screenshots, and the rest of it, which is what, you know, what this is about. So that's another short. Let's take a look at it. Where to go? Yeah. Now let's look at this. Here, VPOC migration. I kind of came up with this many, many years ago. I don't know, early 2000s, I think it was. I can't remember because it's too long ago. And I started trading using concepts of shopping because I had done system design, and as you guys know, my background, money manager, fund manager, all that jazz. So I was very much system oriented to try to manage dollars across asset classes. I mean, it was just, you know, made a lot of sense. And this is back in the day of swing trading, trend following. The day trading really didn't exist much back then. We barely had domes in 2000. It was all different, you know. So let's watch. So these are additional shorts, okay? But there's more. So all of these are shorts. There's been no long in here unless you took the first long up to the overnight volume point of control. There's two ways to play it. Long up the overnight volume point of control and then short from there. Or a long you don't take, anticipating the overnight volume point of control in order to get short. So where do we go? Too high? Where do we go? I'm not paying that. I'm out of here. Too high. Short in the Trader Lab. What about this? Is this too low? Maybe. Short in the Trader Lab. Short in the Trader Lab. Okay? Let's keep going. Now, there's something else. At 9 a.m. Central Standard Time, and I want to thank the team in the Trader Lab and to Rod for extracting statistics. So you guys understand, if you're in YouTube, the Trader Lab's a group of like-minded traders with a variety of skills and experience. And we come together to leverage that collective experience in order to do better. And if you're in this business, and I've been doing it almost 44 years, the thing about doing better, you never get to where you want to be. Just like any professional is always trying to be better, you know. So here's this liquidity in the book. Notice how it comes in and disrupts, and the market comes back up, checks this price. I'm not paying that. This drops down. This is too expensive. I'm not paying that. Down. Comes back. Tests right there. I'm not paying it. That's resistance in my little world. Why? It's shopping. I'm not paying it. It's too expensive. You ever go to a store and say, I'm not going to pay it? I'm not paying that. All right. Down. Now, IB30, which is what I was going to talk about, it's right here. If we take out the first half hour's low, there is a high probability, past performance not indicative future results, and all these statistics, I'm not going to quote them, they're available in the Trader Lab, that we're going to take this out. In the next half hour. So we take it out here. There's another one. If we take this out, there is a high probability that the first hour's low, which is here, called the initial balance, which is established the first hour's low, that we're going to take that out. This is gaming theory. Probabilities, not predictions, probabilities. So if you're in the Trader Lab and you're taking these shorts, or you took the short and you've been adding or scaling subject to your vetted trade plan, you're just on the short side, you're adding here, you're scaling, and with these statistics, it's telling you potentially to continue lower. And again, you got to vet these for yourself. Let's see what it does. And by the way, this is a target in a higher time frame down here. Let's see. This is a target. Right here, you could be out. And this is on the price map. Let me bring you back to this. Should be on the map. 49.03 half. Let's just go take a look. $49.03. You can see it, the red line right here, 49.03 half. So target. So let's go take a look at these, how it worked relative to the higher time frame. What was this? High volume. This volume in here, all this volume and levels were created as of yesterday. I include all the volume in this consolidation. That's what the volume profile is about. It's the individual time frames, fractals, if you will, and now this is the intermediate. So this was an outside edge. So this was too high, squeezed out the shorts. Thanks for playing. Downside target, fair price here, outside edge is here. So this is the next target. So we're sequentially moving down. okay? Outside edge of this. Now, what is this thing? Let me give you 10 seconds here. This is like an outside edge, low volume. What happens at low volume areas? It's an exhaustion. In other words, low volume is kind of like, if you look at the belly of this thing, this is what's called a distribution. All it is where there's a concentration of volume. Okay, very simple. Don't overthink it. When you run out of volume, if the market moves higher and you run out of volume, it's saying is, yeah, there was buying up here, but it exhausted. That's why the volume tapers. If the price gets too low, we can run out of volume because it's on sale, and you've ever bought something in the store, they don't leave it on sale, right? It then tends to rotate back to the high volume. So in this, too high, too low, retail. So if I'm trading in fractals, I'm selling too high and I'm covering too low. That's what volume profile is. And it's not prediction, because we're all clueless. The thing about this is we can understand and know levels. We don't know how, we don't know if, and of course we don't know when. So since we know nothing, it is random. You don't know how the market might operate. So you'd be done with your short. Now, where did all this start? Let's come back. Where did it start? It started from here, the shorts. So that's roughly 49.30 to wherever it is down here. Can't even tell. Wherever it is. Oh, up here. 49.30. So that's rough. Let's just call it roughly a 30-point rotation. I hope you're getting something out of this, guys. Does that make sense? Can you kind of see the price map and how using the auction, and I don't use any indicators. How can I trade without indicators, you say? Well, I trade without indicators because they were a big problem. That's why I don't use them. I'm not saying you can't. I'm saying I can't. However, here's where we run into problems using indicators. It's because we think that the market is one size or one behavior, and we kind of tune, tweak, and curve fit to the behavior that gives us big aha thrill and profit, right? Like this. One direction. Call it trending with minimum counter rotations. It's the best opportunity, right? But what happens when it changes and goes into two-sided trade? That's when you give back any of your gains, and then you're going to do Trader Groundhog Day. Let me tweak, tune, and all that jazz. It has nothing to do with tweak, tune. It has to do with not understanding market mechanics and that the market is dynamic and it changes. In the Trader Lab, we have different trade plans for different conditions. That means the market could trend in the morning and then go into chop. That's a different plan, because the one for directional trading won't work in a chop, chop, chop. That's called getting chopped up. Now, everybody takes losses and stops, but where's your edge lie? And can you define conditions, or what it's really called is context, and adjust to the developing and changing context? Like here. By the way, what's too high? Variable high volume node. Where's the stops? VWAP and mid. So here's what you have. Too high, VPOC migration. Too high. Right here, let's mark it. IB, initial balance. This is called the IB continuation trade and is a Trader Lab structured trade. And the target is this. Okay, so let's just, and this is not a trade recommendation. So this is a priority input. So this and this. So here's what I know. This is too high. This is retail. If we are shoppers, which is what we are trying to do, as traders, we're basically shoppers. You know, buy low, sell high. You know, remember that, right? Sell high, buy low. Or it's high. Well, this was too high. The volume is down here. Now, what we don't know, and this is, by the way, an aggressive location. Why? VWAP in mid. What's above the VWAP in mid? Buy stops. So if you get involved here, you're going for this. and you've got, I'd say, more risk of a squeeze. So if you got, and this is fine, you can trade this if you have an edge in this. Why? Too high. Retail. I'm not paying that. I'm not paying that. I'm not paying that. Microstructure. Let's look at the micro trigger. Here. Micro volume, location, seller, pullback, seller, pullback. That's a potential short going for this. And again, it's problematic and it has to have an edge. Remember, I don't call trades. I do is share the trades with you. Individual trade plans. See, the thing and this is something that this is where the work is in trading. It's not sitting here doing this. That's all done outside of real time in the sense of where you trade. Trade plan is all done outside. You would know if you're in the trader lab whether or not this is a trade you should take. And this is the target. Now, target means if I put a trade on here, my stop goes here. Me and the rest of the planet. Write this down. Think like a retail trader. Don't act like one. This to me has more risk. It doesn't mean I don't trade it. It just means everybody, retail, has their stops here and here. So what do I know? If I come back up here, then there's buy stops and those are buyers and we'll squeeze. So I have to be aware of that. Do I want to put risk on here with a stop here with the rest of the planet? That's a tough question. I don't have the answer for you. So this is a technical short and maybe not. So now, so when I say structured trades, these are the structures. You have to vet them. Think about setups or structured trades like games in a casino. The casinos only play games that have an edge. So does this have an edge with this and this? It's a tough question, isn't it? The only way you know that is by looking at 30 to 50 situations that are like this, where you are selling the VWAP. In other words, VHVN, variable high volume node, the VPOC is the trade. Buy stops are here and here. You need to analyze this with this condition, and do you have an edge? It is a structured trade. It might not be your structured trade. It is a structured trade. There's another piece to this, by the way. We have multiple setups here. Let me explain what they are. First of all, there's a couple of them here. I am negligent. 930 is the initial balance. Remember, I gave you there's a high probability statistic. Off we go. And you got your target down here. Don't forget that too. We come back. Whoops, sorry. Let me show you this. There's a couple trades here. We come back. So this is a potential short here to there. That's one. That's called the IB continuation. We come back up. We squeeze this. There's stops here. We come here, chop. You get VPOC migration, too high. This is an IB continuation trade. You can't get into it. This is too high. Watch. And it's the IB continuation. So you have a structured trade here and here in tandem. And now you're going for this. So let's just see if it works. You know, nobody knows. And this trade's a short in the trader lab. So, so we're going to watch this, okay? This is real time. And it's either going to go here or take these guys out. So what is the job? In the trader lab, what do you do? Now, the trader lab, and this is something you have to vet. Everybody's different. What you need to be doing is what is the probability that if you took a short here and you entered, let's say here or here, wherever, and your stop is here, to cover the distance from here to here to get risk neutral before taking a stop. Your risk, if you use the minimum two lot configuration, is going to be, of course, up here with everybody else. High risk, in my opinion. And of course, what's that matter? It's random. So the distance from here to there is the same as the distance from here to wherever that is. One contract in a two lot configuration will be used to get risk neutral. Now your stop stays here. Now, what are the possibilities? You take a full stop and, welcome to trading. Cost of production and overhead. If you think like gaming and a casino business. If you think like, oh, I need to be right, and oh, it's terrible, wrong business, then trading might not be for you. The casinos do not go behind the wall and cry when somebody loses or when they lose money. They go up, cost of production and overhead. Come on in. Maybe you'll get lucky. How do you think they extract their dollars from the gamblers? Large sample size, not one hand, and for us, not one trade. And it's hard for us emotionally to separate ourselves, of course, from the outcome of any one trade because we're emotionally wired and connected. I can assure you the casinos are not behaving that way. And that must mean something, doesn't it? So you'd get risk neutral, and then this is your target, and then you're holding. That's it. So the primary trade is risk neutral to here. Is this too low? Well, this is too high. So now we're going to try to find out, is this too low? And what about this? And we have liquidity resting in the book. So this was our target. It doesn't mean it's the end of the world or anything. It just means it was a target. We've already achieved it. So I know this, and this is called mean reversion outside in trading. This is the mean. So this is a different trade plan, you see. This trade plan still is short only at the moment, and we're trying to come back here. So don't know. So the goal again is first contract covers the risk from entry to failure. So the worst that happens is you scratch and your broker sends you a gift basket. This is the trade, this is the target, and it's not a recommendation. Anybody have a question? How are we doing in YouTube? Everybody conscious? So we'll see what this one does. And by the way, in the end, all of these have to be vetted, and you have to kind of do your own thing, you know? That's pretty much the way you need to be thinking about this. You know, for example, does this trade give you an edge to get here? Or because of its location, is the probability of getting squeezed out? You see, that's where vetting comes in. And I can't say what you should do, but I know what I do. I get risk neutral or take a full stop. And that's as deep as it gets for me. So that's why the two lot configuration, say. And then if I scratch, now here's the other part. Where's my next trade? Well, if I get risk neutral and I scratch, what's above me? Mid VWAP. And what's here? Retail trader behavior buy stops. So then my outside edge, potentially, or retail that was too high that I left behind, is out here. That's what I know. I got this. I got this. So that's my alignment. And if I push over this, I'm potentially out here. Remember, volume dries up, too high. Come down, volume dries up, and doesn't necessarily look like we're done, but that's not my job to predict because I can't. So I just know the distribution of the volume. So let's see what it does. The important thing, in all this is you could trade anywhere you want if you understand statistics and edge, but you also got to understand retail trader behavior. There's buyers here, stops here and here. So this trade is, and the point I was trying to make is, it's not that you can't take the trade. You got to understand that it's a vulnerable position because of retail trader behavior. In fact, write this down. Think like a retail trader. Don't act like one. I'm okay with this. That's my target. You see, the risk reward works for me. I can, that's almost a 10-point trade. I can do that. If I get risk neutral, I can do it. And of course, I can take a full stop. By the way, if I get short here, my stop is basically here. VPOC migration. Warning, Will Robinson moment. Too low. Volume is shifting. That is saying that's too low. This is retail. We're back here. So now this has to push off here immediately, which I kind of doubt, but I don't know. Because now if this is retail and that's too low, where's the buy stops? Here. So right here, it's either exit stage left, right here, and right here is call it a fulcrum of sorts. I think we're going higher. It's not a recommendation because I have no clue. Right here, though, it is saying this is too low. Look at this like a distribution, like too low, too high, or here, too high, too low, too high, too low, retail. And that's too low. Well, let's come back here. This was too high. We checked it here. Too high. See you later. Now, too low. Shift up. More volume. Remember, shopping. If that's too low, this is retail. Buy stops are here and here. This was the concern for the short. And right here, we're either going to push off or squeeze. I still think the potential is to squeeze. I don't know. But you know what's so nice about this? In the Trader Lab, if you have a vetted plan, you would be risk neutral. And you're saying, okay, now right here you have choices. You can bail out right here, or you see how it resolves. It looks like it's resolving upward. So this is microstructure. We got to watch this right here. If it breaks down, potential to continue. Potential, though, is to go up. Not a recommendation. So this trade would be over. It's not a big deal. You probably get a happy meal out of this. And given the way the inflation is with the Big Mac index, maybe you'd only get half a meal. Are you guys tracking? How we doing? Hi, Costello. Yeah. DK, all the volume in the market, retail traders are just part of the financial food chain. I mean, everybody's in there. Algos, HFT, higher time frame, I should say, higher time frame traders, market makers, hedgers, doesn't matter. We're all in there. When I say retail, I'm not talking about retail traders. I'm talking about volume. And if you consider high volume is a retail price, the equation, if you might want to think about it, is in a store. See, traders are shoppers if you think about it. When you go to supermarket, you're a trader. You buy low, and if you're a seller of a product, you want to sell high. In between, to create high volume of too low and too high is retail. That's what when I say retail. Retail creates high volume. Now remember, right here was key, right? Too high, risk neutral. Your stop is here. I want to drive a simple point home. So this, too high, retail. This was the target from here to here. Now, again, I have no clue. When this shifts up, this puts the short in jeopardy because it's saying too low. The nature of this, and I remember, now here's the point I want to make. Remember I said, I think the trade's going to be taken out? That's my emotional response. What does it have to do with the outcome of this trade? Nothing. That's what makes us punch out of a trade. And because we are wiring, and I feel it myself, I am wired to run from the saber-toothed tiger. I am wired not to lose. So are you. But what is a trade plan? What does it happen to the casino? If the dealer is playing blackjack and the gamblers are turning over great cards, what does he do? Just throw his cards in and just stops? He plays the game out, doesn't he? Because that's the way you extract your edge over a large sample size. He doesn't change the game. Say, "I'll screw it. Forget it. Let's just go on to the next one. You guys won." Nope. Well, it's the same as this. I'm not going out of heck with it. I'm bailing out here. Why? Because it hasn't rejected this. I think it's going to take this out. And it might, always might, can do anything. What has changed? Nothing. So if I get risk neutral, my stop is above here, and I, quote, anticipate, expect to get stopped out. What happened? I didn't get stopped out yet. Still might. Nothing has changed. Where's my target? There. That's this trade. I got to mark this, by the way. And then it's whatever, random. Are you guys tracking? I feel the same things you do. And the reason I do is I'm built the same as you. Fear and run from the danger. This is danger. Stops are here and here. It's danger. By the way, selling iceberg. He sold there. Let's see what happens. Absorption down here. So we got absorption here. Buy iceberg sitting out here waving. Hey, Louie, fill me. Too high. Let's see what happens. This is just one trade of the Trader Lab. This is just one of the many, many trades you would take. And there's more. You said, really? There's more. So this is too high. This, right, was the short. This is a structured trade in the Trader Lab called the IB continuation trade. It's here. This now is retail. It says this is too low. Oh, I'm going to get stopped out. What happens? I don't yet. Seller, too high. And this is still the target. Nothing has changed. And then maybe this or not, doesn't matter. Are you guys tracking? Costello, we can't serve alcohol to the other participants, but in many ways, we are all under the influence of our wiring and our fight and flight and fear and impulses and chemicals in the brain. The limbic system, which has worked well from running from the saber-toothed tiger on the savannah, does not serve us in trading where we have to run into the fire. So the things that go off in our head and the chemicals that cause us, it's almost like Jekyll and Hyde, and you bring up a good point. We are under the influence when we trade. We're under the influence of the limbic system. I call it Jekyll and Hyde. You've all heard the story Dr. Jekyll and Hyde. Dr. Jekyll, logical, scientist. And then Hyde was the unbridled emotions that would obscure the existence of Dr. Jekyll, and there was no control. When we are trading, it's kind of a fight between Jekyll and Hyde. And that Hyde is the wiring or the emotions, if you will, the limbic system that is unleashed. And all of a sudden, there's somebody else sitting at the controls, if you will, or clicking the mouse. Oh, I'm going to get out. No, I'm going to get in. I don't want to miss it. You ever lose it? What's happening is it's the chemicals. In a trade plan, the reason we have trade plans and the reason we work on them consistently and incessantly in the Trader Lab is to overcome that wiring, which takes many retail, and I would say even most retail traders, even if they even understood how this business works, takes them out of the business because they lose control. How many times you said, I'm not going to move my stop, then you move your stop? How many times you said, this time I'm not going to do it, then you do it, right? Same thing. Target, are you guys tracking? How we doing in YouTube? And by the way, I have no idea. Doesn't this look easy? You know what's hard? Not this. It's putting the trade on, not bailing out here. There's a target, and now you're holding for this or you're done in this liquidity. Is everybody with me? Are you guys getting something out of this? By the way, if you find this interesting, there's 60 PDFs of these structured trades you can download in the Bookmap Discord Trader Lab chat, and then you reverse engineer them. There's also all kinds of statistics that Trader Lab participants have extracted and vetted. If you find that interesting, yeah. If you're in YouTube and you get something out of this, please give a thumb up. It's the only way that this stream is going to continue, is if Bookmap thinks that you're getting some benefit from it. And if you're in the Bookmap Discord Trader Lab, we do need you to participate. So what was our target? There. So this is real-time narration, which I don't get time to do. But by the way, if you want to see, if you're in YouTube and you're visiting, you can go to the Bookmap Discord Trader Lab chat. There's a link in the bottom of YouTube, and there's 60 PDFs of these structured trades that you can download and think about, reverse engineer, make them your own. The other part is there's a library of webinars, some up to over 4 hours long, of real-time narration. Now, this is just a real-time trade, that I narrated. What do I know? And I'm going to always say I'm clueless. And if you don't think you're clueless, then you're starting to predict. And I'm going to tell you, the dealers or the casinos realize they can't predict anything either. But they do know they have an edge. So they just play the games the same way, and there's no variable inputs. And I cover this in my primer webinar, which I invite you all to watch. That's the first thing you should see, because then you'll get a better understanding of how the business of trading operates, which is really the business of gaming. It's not the business of prediction. And I know what we do because we've all done it. And most retail traders never grow beyond trying to curve fit and tweak and create certainty because of their wiring to avoid risk. See, we all have to accept who we are and what we are. We are human. And running from the saber-toothed tiger is a great solution back in the savannah. It does not work here. It is gaming. And when you believe, because you're a gambler, that all you have to tune and tweak it, that's what gamblers do. And the problem with having beliefs that are not in alignment with the business of trading or gaming is that random outcome of winning at times is what keeps you believing you're on the right track. And the way you can tune and tweak is called curve fitting, and that is just doing the same thing that most retail traders do. And we know the outcome for retail traders. And think of the thousands and thousands and thousands of traders have done exactly the same thing you're doing. I call it Trader Groundhog Day. And the reason I can talk about it is I've done it, and anybody who's been in this business has done it. The thing is, if you can recognize what works and what doesn't work, if you're trying to fix a defective process from a gambling side of the table, you're still the gambler. How about thinking about it from a different edge or different viewpoint? The casinos don't change the games. They are not using random inputs. They're using something called an anchored input. In other words, blackjack's just played the same way. 7 cards, boom, they cut the deck, off they go, and whatever happens, happens, And the reason the casinos are confident in the games, or shall we call them structured trades that they play, same thing, It's because they play them exactly the same way in a random environment, and they are clueless. They don't know what's going to come out of the deck. They don't know how the gamblers play the cards. They know nothing except they have a game with an edge. They cannot extract the edge if they're changing the game, which means they don't curve fit, they don't tune, they don't change, they don't fix, they don't do nothing. What are the gamblers doing? The opposite. Why wouldn't the casinos do what the gamblers do? Why don't you ask yourself, why do retail traders curve fit? Why do professional traders anchor? Watch the primer webinar, and then maybe you'll get a better understanding of gaming theory versus randomness times randomness. If you have a random inputs with multiple time frames and you're tweaking, tuning, you know all I'm talking about. Who are you? Which side of the table you're sitting on? Should you expect a different outcome from everybody else who's walked in your shoes, who are doing the same thing? We all believe we're going to find the Holy Grail. It's just hidden in the minutia. Let's put more indicators on. And in this complexity, to squeeze out risk, which is part of our survival instinct, run from the saber-toothed tiger deal, all of that is what drives us to make decisions and have beliefs. Those beliefs are not necessarily, and I'm going to say probably, and that means probabilities, probably in alignment with gaming. So if you're not in alignment with gaming, why should you expect a different outcome than the one you already have? I want you to think about it. I'm not saying what you do is right, wrong, or anything else. Okay? By the way, let's come back here. Remember, where was our short? Here, scale, stop here, VPOC migration. Lewis, the world's going to end. Where was our target? Here. Too high. Where's our target? There. You notice this is a structured trade. I hope you're getting something out of the stream. I hope this was narrated in real time, and that's all I can do, and do the best I can, and we understand anything can happen, right? So I can't predict the darn thing. I wish I could. I would skip the trades that don't work, but I'm like the casino in the sense that I only can get a yield if I'm willing to take the risk. And instead of being a personal failure, because I can't predict anything, it's overhead and cost of production, it allows me to try to separate myself emotionally from the outcome. It's not about right, wrong, or prediction. It's about maybe, and it's about randomness. Is it random that this was my target, you ask? I'm going to say the outcome was random, but not the reason. Can you learn this? Yes. Where can you learn it? The Trader Lab. Will it work for you? I have no idea. What do you have to do? You got to invest the time. And this is a language of the market. I don't use any indicators. You'll see some sitting here. I don't use them. I don't need them. I can use them if I choose. I don't need them. This has nothing to do with any of this spaghetti down here. I put it on here because it can be used. But here's the thing. Where do you prioritize your inputs? Is it a oscillator? Is it divergence? Is it a moving average? What? How do you know when the market is in a downtrend and you get a counter rotation? Is this a long, or are you stalking the short? Do you know that this is an area and a structured trade that's here and here against here to get to here? If you're in the Trader Lab, you'd know that. Now, you don't know the outcome, you see. You would know the trade. Then you are anticipating the behavior. If it never comes back here, because right here could have been a short here. But why wouldn't it be? Because this was our target coming down. You remember that, right? If you're at the top of the stream. So we are putting pieces together in fractals, or as you think of them as time frames. What's going to happen? I have no idea. I'm long past predicting anything. I also wanted you to understand how I felt when this happened. When this shifted up, this is an indication for me to, this trade's going to potentially fail, right? And right here in the stream, I said, this is what's going on. But where does it fail? here. Right here, your stomach is doing the flip. Right here, you're going to bail out. How many of you, if this is where the trade fails, would push the plunger, bail out, pick up a Happy Meal, and miss the move to the target? Let's be honest. You don't have to tell me. Answer the question for yourself. You see? Is everybody tracking? Are you guys tracking in YouTube? You getting something out of this? Give me a thumb up in YouTube. That's the price of admission, or at least visiting. A thumb. And the reason I'm asking actually humbly is because the only way this stream is going to continue is if Bookmap sees that you're receiving value. That's it. And the thing is, I don't get a... Yes, demo trader. We're all shocked, right? Yeah, please hit the like button. There's a button. Thanks, DK. Down in the bottom of YouTube there, you'll see like. Please hit it, guys. And if you're on your way out or anything, please hit it when the stream ends. And remember, there's 60 PDFs of structured trades you can download. Just going to show you, and then we'll go back to real-time narration, but they look like this, you know, circles, arrows. These are, and I did these. I'm not a vendor. There's no anything. There's no course. It's a community. You know, why? You know, and back at the time, I was working with Bookmap developers. This is from 2021. This is like 2020. I didn't do these with any intention that anybody else would see them. I just threw them in because I was getting a lot of questions. What are you doing? You know, well, this is what I do. You know, nobody knows about my background. It doesn't matter. You know, I'm just same as you. I just had more opportunity to hit my head against the wall. You know, I started in 1980, and there was no order flow, no domes, no nothing. You picked up the phone, you called your guy on the floor. How's it going? Where's the paper? That kind of thing. Timestamp. Write out your order on a piece of paper. Timestamp it. Call the clerk. Hand signal it into the pit. Wait to get your fill back, and and then you'd write it down and timestamp it. That was the business. That's when I started. So there to there. Here, it's going to fail. No, it didn't. Why? Stop there. Brain going off. Jekyll and Hyde. Hyde grabs the mouse, pushes out here. Why? So you could save those 2 ticks. Miss the target. So I don't know about you, but I'm okay with this. You know, basically call it 1175, 12 to here. 7 point trade plus the scale. So you're probably you probably picked up, this is on a 2 lot of $400, $500 trade. What's wrong with that? And the shorts we had from up above were almost, what were they, 20 points or something? And that's assuming you never added, which is also part of a potential trade plan. So I hope you guys are getting something out of this. And I invite you all to visit the Trader Lab if you haven't done it. There's a lot of material here, not to mention about 26 webinars of real-time narration, higher time frame, transitions. One of the things that's really hard, and most retail traders are a one-size-fits-all crew. You know, hey, I'm going to catch every big rotation down. Meanwhile, what do you do with this? What do you do? Are you going to be selling this? Are you going to be selling this? Are you going to be buying that? That's what we think the business of trading is, right? I'm not saying you can't do it. I'm saying I don't do it. So if this is too low and this is too high and we have buy stops here and here, what do you think is the next possibility? Where's our next potential trade? Not a recommendation. Here. If you're in Trader Lab, and this is not necessary, this is not mechanical. What has to happen is, just like what happened here, there's the location. Where's the trigger? That's fractal. Think of Russian dolls. one of the things, most retail traders are time-based. I get it. 15-minute, this 5, 4, 3, 2, 1 hunt. Tick charts, that doesn't matter. All that's all the same stuff. Doesn't matter. The thing is, we think in time, and I used to do that too. I'm the same as you. Whatever you've done, I've probably done it. I've done probably more than most of you have done, and it's not anything more because I've had more time to do it. Started in 1980. You got a lot of time to beat your head against the wall. And I did system design. I worked with, if you've ever heard of Omega Research, I used a process and a product before a predecessor to TradeStation. It wasn't even real time. It was end of day. And so I have a lot of background. I shared an office with George Lane, who had actually invented stochastics. And I remember early on, it was Wells Wilder. I'm just going back a little bit to say, I've gone down so many paths because they looked right. It was, finally got it. Oscillators, RSIs, divergence, DMI, ADX, all this stuff. Pick it. Envelopes, Bollinger Bands, Keltner channels, Fibonacci. I'm only saying it, and then time frames. The thing about time, it has nothing to do with participant behavior. Let's take time and change it slightly and use the term fractal, because what happens in here is not regulated by a clock. That's a human invention. The market is based on participant behavior and interaction. It's an auction. What's too high? What's too low? What's too high? What's too high? Same thing in a fractal. Russian doll. Break. Selling structure. This is our entry. This is an entry also. Break. That's a short in a fractal. There's a target. You see, anyway, the trend is down. So at the moment, it's for me. Now, there's other traders, so who are just, whirling dervishes. Sell this, buy this, target this. I don't know. For me, I can't operate like that. I'm just not, and why would I not if I could read it? Why wouldn't I do that? Why wouldn't I do it? Risk reward. My risk to get short here and here is the same, and here is the same to get short at the high of the day where we had that location, the ETH up here, right? This was the original short. Down to there. And I'm putting the same risk on there as I put on here. Why would I get long here? Now, I might get long because we know FOMC and all that jazz is coming up. And if the market is short, you'll get short covering. And where's the stops? VWAP and mid. Is this a smart trade? I don't know. It's not my trade, though, because my risk from here to here. Now, I'm okay going from here to there because I have a downtrend. But I also mentioned in the stream, this was my target for that swing. So I'm going to there. Why is that? Because I already hit my outside target. And this is not necessarily the low of the day. This is just now. Hope you're getting something out of this. And again, if you're interested in this process, remember, I don't use indicators. It doesn't mean you can't. But here's the thing. If you understood how the market works and behaves, not based on an indicator, but based on participant behavior, in other words, auction, and you understood it, and it takes time, believe me, this is like reading a language. Ever try to learn music or speak a foreign language? You don't just read a book and now you're off and off you go. Nope. You got to learn it. You got to invest time. It takes time and brain damage. And if you want to speak a foreign language, so you learn the language, you understand how the market works, You understand it's gaming and anything can happen. Now, the other piece of that is if you use indicators and you understand market mechanics, now can you use an indicator when it's in alignment with the condition of the market? It's kind of like, does the indicator, the tail wag the dog, or is it the chassis and the dog? And you can use an indicator to help you with timing. Let me show you. And remember, if you're interested in what we do in the Trader Lab, it's a free community of like-minded traders. And there's a lot of resources, 60 PDFs of these structured trades you can download and reverse engineer in a library of webinars. There's a link in the bottom of YouTube. You go to the Bookmap server, say hi. You won't be solicited by Bookmap. You never, now, ever, never, and you don't have to be a Bookmap subscriber. And there's a lot of additional free education, stocks, options, crypto. Let me try to show you this, if I can. This is CVD or Delta. This is Market Pulse. Let's see if I can come up with something here. Now, I don't use indicators. Let's see if I can see the short. So this was the location, right, for this. What do I have? Market's coming up. Let me try to get this. I don't use this, but I do think it can be used. The problem most retail traders have is that they think this is what trading is. Oh, it's an indicator. No, it's not. It is alignment. Here's the location. Here's the alignment. Here's the buyers in this leg. Here's the market pulse showing this is CVD. The pulse is here. It's showing me the pressure in the order book, and it is too high. Now you notice it's not right on the point. My trade is based on this, which is what I narrated in real time, you see? So this is your entry, right? So right here, so if I'm using Market Pulse, I'm seeing the buy volume, and I see no progress. So this helps with the short. Now, the fact that it shows me that it's oversold here, is that a long? No, this is what retail traders do. What does it show me up here? Overbought, little green, right here, Market Pulse, retracement, this shifts up, warning Will Robinson moment. It's either you're in or you're out, seller, back to here. Does that make sense? Anyway, I hope you're getting something out of this. Please give a thumb up on your way out of YouTube. Remember, you can access the 60 PDFs of these structured trades so you can reverse engineer them. The Trader Lab is a group of traders looking to leverage their collective experience. Be sure to watch the primer webinar first. It gives you a high-level overview of this process. There's over 27,000 views of that, so it must resonate a little bit. You're welcome to look at it. It's all free. Also, there's a library of webinars, some up to 4.5 hours long of real-time narration. The thing that's hard among everything we do is not understanding how the market works, why it does what it does, and also that we're in a gaming business, we're not in a prediction business. Everything we do typically is based on our emotional wiring. We're not even conscious of it. Zachariah asked a question, and I do have to log off. I'm on a schedule, and Bookmap does not want me streaming beyond noon, so other streamers have time. And please give a thumb up again in YouTube if you got some value. Visit the Trader Lab. And the thing about trading is to understand we're in gaming. That's all I can say to you about it. Any last questions, guys? Okay, guys, thanks again. Keep an eye out for the squeezeteria. Why do we think that? Too low, retail, where's the buy stops? This was what my concern was about when we had this, and it was either back to here or squeeze. So what do we anticipate now? Buy stops, VWAP mid. If this, then that. If not, then what? Follow the yellow brick road. Hope you got something out of this. Again, guys, thanks for visiting the Trader Lab. FOMC, so wear a helmet. If you don't have a specific plan for trading this kind of news, it's best not to, subject to your plan. Take care. Thanks again for visiting Trader Lab. Appreciate your interest and time. Don't forget, there's a link in the bottom of YouTube if you want to come to Trader Lab. Download, all the materials, and then it's a great community of like-minded traders. It is a serious community looking to leverage our collective experience. We're all trying to get better. If you want to get better, you might want to visit Trader Lab. Maybe it'll help, maybe it won't.